You are listening to Mining Stock Education, where you'll learn from the top leaders in the natural resource sector and uncover quality mining investment opportunities.
The only participants in this January effect are probably going to be resource speculators, unless the stock market begins to roll over and we finally get some generalist interest in this sector. That's what we need, because we've been basically trading amongst ourselves.
Welcome back to Mining Stock Education. I'm Bill Powers, and this is our end of the year 2021 check-in with David Erfle of JuniorMinerJunkie.com. He's been speculating in junior mining stocks for 2 decades. And David, I know that you have a very systematic, guided approach with principles that you've created and rules that self-govern how you do this. But, this was a difficult year, especially in regards to tax loss selling, which it seemed like half of the year was tax loss season. So I'm just curious, what did you learn most this year, or what new guideline or rule did you add to your governing principles?
Okay, well, first of all, thanks again for having me on. It's always great to talk to you and your audience. The biggest lesson I learned, I've experienced these tax loss episodes in the past, and had a set of rules. I'm not going to buy something until it does this. I'm not going to start getting into this until it does that. Things like that nature. And since the tax loss selling, I've been saying this ad nauseum for the past few months, began in mid-June when the Federal Reserve started talking about tapering. That was the cue for a lot of these people that had huge losses in their mining stocks and their juniors that they previously chased price and made big mistakes, started to sell. So since it started so early, I figured it would end early. So when we had that move last time I was on your show, and I said, well, we should start to take off when the gold price has a weekly close above 1850. And we had that weekly close above 1850, and the gold price hung up there for a little while, and the stocks popped off a low, and a lot of these juniors had nice moves. I figured, okay, the tax loss selling looks like it's ended early. Lo and behold, it turned out to be yet another bull trap, and a series of bull traps and bear traps during this consolidation. I mean, there's, both sides have been whipsawed out of positions. On December 1st, we had a huge downside reversal in the mining sector, and that's when tax loss selling really ramped up. So basically what I learned is tax loss selling can go on longer than you think, even when you might believe that it's ended a little early.
That's kind of similar to that. The market can stay irrational longer than you can stay solvent.
Exactly. I learned that lesson a long time ago in this sector. That's why I have those rules that you referred to at the beginning of the podcast here.
Okay, so I got to hit you with one more, I guess, negative question before we get positive.
Of course.
What was your biggest loser? Come on, you have winners, but in this game you have losers. Can you share a little bit about your biggest loser and what you learned there?
Yeah, I think it was Falco Resources. They've got this, fantastic management team, the Osisko management team. They built the Malartic mine. They're in a great jurisdiction. They've got all this infrastructure. It's a huge brownfield project. They're building this state-of-the-art mine. They had a bit of cash at the time, and I figured, okay, this is a good time to get into this. And I don't remember when it was, but there was just no progress on the ground at all. And the stock just continued to drift lower and lower and lower. And I waited around a little longer than I usually wait to sell something. And I sold it at a 25% loss as opposed to a 20% loss. Because that's my rule. If something goes down 20% and the sector is not in a bottoming process, I will go ahead and sell it, take the loss, and move on. And that's one I did not do.
Okay. Your biggest winner of 2021 now.
Biggest winner of 2021. Well, I had a few. The first one these were early. The first one was Monarch Resources. They spun out a company, Monarch Mining, and they were bought out by Yamana. Then there was Teranga Gold. They were bought out by Endeavor. Those were nice winners for me, 3-4 times, three, 4 baggers, something like that. I was fortunate and I took a lot of profit at the beginning of the year. And unfortunately, that's where most of my profit came from, was at the beginning of the year. I had these rules and I, even though the sector has been, extremely volatile since, I began a portfolio again in Q1 of 2016, a junior portfolio, I've averaged realized gain returns of 22% each year. I've had really good years of paper gains that were not taken, and some of them fell by the wayside, and that was this year. This year, I had a lot of paper gains at the beginning of the year, and a lot of those paper gains did fall by the wayside. But my rules have kept me in profit through the bull phases and the bear phases since the portfolio began in Q1 of 2016.
Torque Resources is an exploration company establishing a portfolio of premier copper-gold early-stage projects in Chile. Torque's management and technical teams have a strong track record of raising capital, discovery, and monetization of exploration successes. The company's Margarita copper-gold project is located within the prolific coastal Cordillera Belt in Chile, which hosts some of the world's largest and most profitable copper mines. The Margarita project possesses excellent discovery potential for a major copper discovery due to the strength of the alteration system, large-scale magnetic targets, and the presence of copper oxide mineralization. Drilling is anticipated to begin in Q3 of this year. Torque trades in Canada under TORQ and on the OTC under TRBMF. To learn more, go to TorqueResources.com. That's TorqueResources.com. Dave, what about investor sentiment? When I get a lot of feedback, primarily through YouTube comments, where people will comment on videos over the last 5 years that I've published, and they'll come to me today, I'll read it, and it's just ultra negative. I think it's the most negative gold sentiment comments that I've seen in 5 years of doing this. And they're comparing to what we've seen in the last year, right? As things have pulled back. But you were saying to me earlier, though, if you compare backwards to where we were previous, we're actually in a decent place right now.
Absolutely. We're in a very good place here. I mean, if you'd have told me at the beginning of the year that gold price was going to end at 1,800, and yet the GDX was going to end around 41, I would have laughed you out of the room. Yet here we are. Basically the GDXJ is trading at an area where it last traded consistently when gold was about $1,500 an ounce. Gold, the area that it's trading now was strong resistance when gold was attempting to break out, for years above 1,400, and it finally broke out, and the GDXJ got to around this level, maybe a little higher, and started to go down again. But the gold price was a lot lower than 1,800, and also a good comparison, a better comparison for the climate right now is the comparison of late 2015. Because in late 2015, you kind of had the same situation where you had the Federal Reserve was talking about hiking rates for the longest time. And the gold stocks began to bottom around September after a very, very brutal bear market, which saw the GDX go down 85% in like 4 years. So that bottom was being created before the Fed actually announced a rate hike. And when they finally announced that rate hike, a few weeks later, I even remember the day, it was January 17th, where the gold stocks after making a 6-month flat bottom, had this huge spike lower where it broke that support, and it did a sharp reversal on that day, and it didn't look back and went up like 160% in 6 months. Now, is that going to happen again this next January? I don't see something like that happening again, no. But I see comparably speaking, what the Fed did was they announced a change in policy, a major shift in policy. And that's what they've just done recently at their December meeting in 2021 as well. They've announced a major shift in policy. All these other central banks are, the EU has been at negative rates since 2014. They can't even talk about, easing up on their QE, let alone raise rates. And here's the Federal Reserve, increasing their tapering, saying they're going to wrap it up by March and they're going to start increasing rates. And the market is priced in, 3 rate hikes, starting to price this in. Meanwhile, the gold price is in an uptrend. It's actually, you wouldn't think of it being in an uptrend, looking at the gold stocks and what they've done. But the gold price has been in an uptrend since it made that spike low at 1675 in August in the overnight market holiday trading, where there was hardly anybody trading. And, they took advantage of the situation. The shorts took advantage of the situation to run the stops and run it down to 1675. But that was a spike low. It was immediately bought up. And the gold price since that time has made a series of higher highs and higher lows. But if you take a look at the gold stocks, they haven't been reflecting that, because they've had, in my opinion, the worst tax loss selling climate I've ever experienced in my 20 years in this sector. I've never seen tax loss selling this bad. And there's a few reasons for that. But the biggest reason for that is the S&P 500 today looks like it's going to make its 70th all-time high this year. Why would I mess around with these gold stocks that are risky? The gold price has gone nowhere this year. It's traded in this tight range basically for 9 months. It's traded in a tight range of $100, $17.50 on the bottom, $18.50 on the top. We've had bull traps above it. We've had bear traps below it, but it's maintained inside that tight structure for 9 months. In the meantime, every other sector keeps going higher. And if you take a look at the volume on the GDX and the GDXJ, it's drifting lower and lower and lower. Its apathy has creeped into the sector, but at the same time, all these other investors that chased price, which you never do in this sector, in the junior sector, you don't chase price. You wait for weakness, to buy weakness. All these people that came into this sector not really knowing what they're doing, they saw a hot sector and they jumped into it. For the past 2 years, if they chase price, they've sold for tax loss. And that tax loss selling is wrapping up in Canada today. And it wraps up in the US on Friday. So it'll be interesting to see, because every January, we usually have a nice run in the gold space. And this year, I expect an even better run, because basically, anybody of size that was going to sell has sold for tax loss here. And that includes a lot of these high quality juniors. I've accumulated a bunch of companies for the past few months. Some of them I got in early, too early. Some of them I got in early and was rewarded for it. Some of them I got in too early. But I do have more cash to add to those, and maybe even add one more position before the January effect takes hold, which I think will at least have a sharp bounce in January. What's going to happen after that bounce remains to be seen, but it's a good time to basically get into the right companies right now to hold for a long period of time and maybe take some profit off the table. If you do get that bounce, then you feel more comfortable holding your core position of that company for a longer period.
Okay, so your confidence in the January bounce that we expect, what happens beyond that, we don't necessarily know. But with all this exhaustion of sellers that you've talked about, with 6 months of tax loss selling, I mean, this is more of a coiled spring. If you're going to gamble on just the seasonality of January and February, where you can usually make 50 to 100% in these minors, just in that short period of time, it's probably more of a coiled spring than in your previous 19, 20 years of doing this, Dave. Is that
Exactly. But a caveat to this is the only participants in this January effect are probably going to be resource speculators, unless the stock market begins to roll over and we finally get some generalist interest in this sector. That's what we need, because we've been basically trading amongst ourselves, ever since the gold price topped out and the generalist investor ran away from this sector at the beginning of the year. You saw it happen at the beginning of the year when this year when January started, we had the first week, we had a nice move, right? And, fortunately, I took a lot of profit during that week. And ever since then, it's been slowly drifting lower and lower. And I think that's when a lot of those retail investors got out of the sector.
Got it. You know how you always say it's just us gold bugs trading amongst ourselves. And I have an anecdotal story to that. A few months ago, I sold some shares of a company, and then I got an email that someone said, I bought shares of this company today at such and such price. And then I looked at my account and I'm like, I sold you those shares. It wasn't a lot, but it's just an anecdotal story, like to your point, that like you almost know the people you're selling to at this point. Right. But it's a powerful point. If we're going to have a strong move in January, February, and beyond, we don't just need a pop in the gold price. We need the general market turnover so that we get an influx of new buyers, because that's what we're lacking.
Exactly. And I don't think that's going to happen until, I know last time I came on your show, I said a weekly close above 1850. I was obviously wrong. That was a bull trap. Now I'm looking at 1900 gold on a monthly close. I think that will get some generalist interest in the sector. I mean, it's funny. We had on Fed Day on December 15th, we had that huge reversal in the miners. It sold, the miners. It's funny. I told my subscribers, you're going to see the miners selling into Fed Day. And a few weeks even prior, I said we might even have a chance of a double bottom in the GDX and the GDXJ and silver. And so far, that looks like that might be a possibility. But on that day, when you had that huge reversal, and you saw the NASDAQ that day was down about 2%, I think. But Newmont had this huge spike. It ended the day with this big, huge white candle. And that is sector. I think that you saw a little bit of sector rotation today. I'm going to take some of my high-priced tech stocks and put a little bit into this gold stock. It's the largest, most liquid gold company on the planet, and I'm gonna rotate out of my ridiculously overvalued tech stocks and put a little bit into gold stock. I think you saw that day. And Newmont, by the way, continues to go up ever since then. So you're starting to see just a tiny bit of it. And it doesn't take much. This sector is tiny. I mean, if you take the entire market cap of the mining sector, it's like $700 billion. That's it. So, a big hedge fund puts a little bit of money into the mining space. That's going to create a big move. And all it takes is, this to start happening for the pendulum to finally swing, and that's what we've all been waiting for. It's funny, and I alluded to this earlier in this conversation. I said that this consolidation process and consolidation processes, especially in the gold market, can be extremely frustrating. And this one has been extremely frustrating. If you're a trader and you're trying to trade bullion, you've seen a series of bull traps and bear traps to get you out of position. So they're just, what? I'm out of it. Why do I bother with this sector when everything else is going up? So this apathy is seen with the volume of the shares going lower and lower and lower and lower. It's like, I was taught, to buy value and never sell a dull market. And the mining sector now is the dullest market on the planet, but it's also the most undervalued. I mean, you've got mining stocks trading at 5 to 7 times cash flow, and you've got S&P stocks trading at 15 to 20 times cash flow. And with gold at $1,800, these miners are making a lot of money, even though inflation is eating into their profits. That's true. All in sustaining costs have risen from like 1060 to 1130 in the past quarter. So their margins are getting squeezed a bit, but there's still a lot there. At $1,800 gold.
Dave, final thoughts. Overall, you're positive for gold bulls in 2022, would you say?
Yes, a lot more positive than I was at the beginning of last year, because beginning of last year, we had just made this huge top. We were extreme overbought. Everybody and his brother was talking about gold. Now it's the exact opposite. Nobody cares about gold. Nobody cares about gold stocks. I mean, That's when you accumulate, not on margin, and you have, patience, and you have a longer time frame. And because we know eventually, the gold price is going higher. We just don't know if it's gonna have one more final washout before it does.
Dave, your website is juniorminerjunkie.com, and there's slots open for your subscription service, which you limit to 500, I would assume, right?
Yes. Plenty of space now. Yes, okay. Absolutely.
It tracks gold sentiment, as we often point out. But Dave's service is very educational. You don't only get to look over his shoulder and see what he buys and sells. He tells you, by the way, what he buys, what he's going to buy the day before he buys it, and he tells you before he's going to sell, and he explains to you why. So if you're a newer speculator, there's a lot of educational value, not just giving you stock picks. Yeah, so you get the stock picks, but you get the education along the way. So it's like, here's a fish, but I'm going to teach you to fish. Would that be an accurate description, Dave, of what you do?
Absolutely. I try to teach my subscribers how to fish.
And I think I've been successful in doing so. I get a lot of cancellations that thank me and saying thank you for teaching me how to trade and how to invest in this sector. I think I could do it on my own now, and that's my goal. I want to teach people how to do this, and also want to say thank you very much for having me on every month. It's always a pleasure to speak with you, and the happiest of New Year's to all your subscribers. Be safe and be positive, because the best time to be positive in this sector is when everybody else is negative.
Excellent. Well, Happy New Year to you, Dave, and we'll catch you in the new year.